Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from the week in tech. Coming up, Facebook in the eye of a post-election storm. CEO Mark Zuckerberg strikes back at critics who say the social media site swayed the presidential race. Plus, Snap is filing to go public. Sources say what may be the biggest tech IPO in recent years could come as early as March. First to our lead, Snapchat begins the process of going public. Its parent company, Snap, has filed confidentially for an IPO under the Jobs Act. This is something a company can do if it makes less than $1 billion in annual revenue. The company would seek as much as $4 billion at a target valuation of $20 billion to $25 billion, and its IPO would be the biggest of a social media company since Twitter sold shares back in November 2013. Our editor-at-large, Corey Johnson, caught up with Bloomberg social media reporter Sarah Fryer and Y Combinator partner Justin Kahn right after the news broke.
Snapchat is filing confidentially because it doesn't have $1 billion in revenue yet, so it can do that via the law. This IPO could happen, as you said, as soon as the first quarter of this year, maybe as early as March. And we've reported it could be up to $4 billion in what they raise. And this is really incredible, considering that they filed to go public before the election. Everything still seems pretty much on track.
And Sarah, same with you. Fairly amazing here that if we're talking about a $25 billion IPO, Facebook went out at 12x revenue and collapsed afterwards. This is a very aggressive pricing.
This is absolutely aggressive. What they're going to try to emphasize, though, is their growth potential. Snapchat is very early on their path for revenue, and they already have about a third of Facebook's users in the U.S. They're definitely not making as much money off every user as Twitter or Facebook do. Twitter has fewer daily active users and is expected to have $2.55 billion in revenue this year, according to our analyst estimates. Snapchat will probably have about $350 million, which is definitely a fraction. So their point is definitely going to be to emphasize growth.
Right, Justin. Let me ask you. You had the tiger by the tail in Twitch, a business that grew so fast, had so many users and such revenue, not unlike Snapchat. And I wonder what your take is of a company deciding to go public with the backing that they've had.
Well, I think Snapchat has a tremendous network effect that's going for them. They have normal people who are using it every day, many times a day. I don't think that's likely to change, and I think that's likely to grow as more and more people come online and spend more of their time on mobile around the world. So I think the long-term prospects for Snapchat are extremely strong in usage.
But what do you think about the IPO as a way for a company to get out, as a way for a company to decide to grow the next step?
It makes sense. I mean, the IPO is like a necessary part of your evolution as a tech company, as a way to get liquidity for your early investors, to get liquidity for your early employees, and I think it's all part of the process. I think the price is pretty high, but I think that we'll see in the long term, these tech companies that have a strong network effect will be extremely valuable. People think Facebook is super valuable right now, but they only have 1.7 billion people, and there's billions more that will eventually join Facebook.
I have a chart on my Bloomberg terminal right now that shows IPO business, but the IPO business, we'll get to that in a minute, but the IPO business itself, Sarah Fryer, has been very quiet. In fact, if you look at this chart on my terminal, you can see that the numbers that we're talking about, how many IPOs have happened in recent years, really low numbers for 2016, and this is on a dollar basis. You go back here, you see some of the benefit from Facebook kind of in the middle of the chart, but fundamentally 2016 has been enormously quiet. Sarah Fryer, why is that?
There have been many factors as for why we haven't seen as many IPOs as we've expected. One thing we keep hearing over and over is that 2017 is the year that we might see the likes of Snapchat, Uber, Dropbox, Airbnb get a little bit more serious about going public. But Corey, the fact of the matter is that private capital has been extremely easy to get in recent years. And it looks like that may have peaked around 2015. And now companies are having to look for other sources of capital as VCs and later stage investors want a return on investment, getting a little bit more skeptical about growth prospects.
Yeah, I can't wait to actually see the prospectus and see what the numbers really look like and see the spin that will surely be a part of that. I want to say with
Anyone who wants to leak it to us.
Yes, but yeah, come on in. Come early and often. Bloomberg's here to help. Sarah Frier's there for you. Look, let's move. I want to change the subject a little bit, but staying on social media, Google and Facebook have announced some actions to stop users from pasting fake stories and deriving revenue from those. That's after critics pointed fingers at these stories may have influenced the U.S. presidential election. Sarah, let me start with you. I mean, this is a story that's really kind of exploded in recent days after the election of Donald Trump for president. And I think to me the strongest thing about this was that story in BuzzFeed about the Macedonian bloggers who are putting up fake stories to generate clicks to get paid.
The fact of the matter is this is an extremely lucrative business if you can figure out a way to play it. The outrage sells, the clicks are easy to get on these social platforms, and Facebook, for its part, needs to take a very close look, it is taking a very close look at its responsibility for distributing information. And fake news is one thing, and that might be easy to quash, but what might be even more difficult to address is these more biased stories that just give you some of the facts, maybe create a misleading perception, and aren't necessarily fake, but are definitely more propaganda-like in their nature.
Well, and indeed, you saw the story that was the fake story of a pending Hillary Clinton indictment, then sort of trumped up, pun intended, by Fox News, and they actually ran with that story, which of course wasn't real. Justin Kahn, Facebook's founder Mark Zuckerberg, says only 1% of the stuff up there was fake.
I think that is completely wrong.
You think that's fake?
I think that's not accurate. If you look at that story that you just mentioned, it started on a viral site that was newly registered, a new site, and that story was shared 216,000 times on Facebook, whereas the New York Times story that was actually true, that said Hillary Clinton was the FBI was clearing her of all charges, was only shared around 80,000 times. And so the impact of some of these fake stories can be extremely huge, and I think it's Facebook's obligation, its ethical responsibility to not help spread fake news.
Did Facebook make money on the spreading of fake news, Justin? And what level do you think that happened?
Well, I don't think it's necessarily direct, like Facebook is profiting off of this fake news specifically, but the Facebook news feed is optimized for engagement, and that means people click on what they want to see. They oftentimes people click on what confirms their biases. And so Facebook has optimized their algorithm to show people what they want to see, and oftentimes that doesn't correlate 100% with what's true.
So it sounds like what you're saying is they did make lots of money on these clicks. They might not have done it intentionally, but their business model was set up in such a way that they were great beneficiaries of all these clicks on all these fake inflammatory stories that had people, as you said, confirming their own biases, Justin.
That's right. I mean, Facebook is basically optimizing for engagement, and when people are engaged, when they click on something, when they like something, whether it's true or not, that person is more engaged with Facebook, spends more time on Facebook, spends more of their attention on Facebook, and so they are benefiting from it.
Meantime, 13F filings rolled out this week, giving us a glimpse at which tech stocks are hot or not, according to the biggest institutional investors. Shares of Twitter rose after the hedge funds, Jana Partners, and Highland Capital added stakes in the company. On the other hand, investors are divided on the outlook for Alibaba. One of its early investors, Temasek Holdings, pared its stake on the e-commerce giant, while Tiger Global Management added more shares. Also notable from Tiger was its decision to cut Amazon and double down on Apple. Coming up, shareholders voted on the Tesla Solar City tie-up Thursday, handing Elon Musk his fate on the bold idea. We will bring you all the details next. Plus, we will hear from Palantir co-founder Joe Lonsdale. Will the security company go public in the age of Trump? This is Bloomberg. The U.S. government will now require new hybrid and electric cars to make noise when traveling at low speeds. That's so pedestrians, especially those who are blind or have poor eyesight, will hear the car coming. Auto industry regulators say the new rule could help prevent about 2,400 pedestrian injuries a year. And speaking of electric cars, Tesla shareholders approved the Solar City merger this week by an 85% vote. We caught up with David Welch of Bloomberg News in Detroit, Ben Callow, senior research analyst at Robert W. Baird, for all the details.
What Elon wants to do is basically put all of this stuff under one roof. So you can buy your Model 3, assuming they get that out on time, and you can get a solar roof, and you can have a battery system, so the sun's rays charge your battery, the battery can charge your car, and it's this one-stop shop. The synergy's there, and this is sort of, I think, what people like Chanos are referring to. It's not really clear why these companies need to be together other than it's Elon's vision. In other words, you're not doing a lot of production of the batteries in the auto plant, so you're not real, or the solar roof panels for that matter. So there's not that kind of synergy. What there is, I think, for Solar City is the synergy of the Tesla brand. It carries so much weight. They've got almost 400,000 people who've put money down to get a Model 3 that when you start to put stuff under the Tesla name and you really bring this all together as one big green, high-tech electric product, that could really generate some revenue. And I think that's what Elon's really pushing with this.
Ben, what do you think the impact is or will be of a Trump presidency on Elon's big vision? This is a president-elect who may not believe that climate change even exists, and that may translate into his support or lack thereof for clean tech.
Yeah, and just one point on the acquisition on the technology front. I think it's important to note one of the things that worried us about Solar City going forward was the Buffalo manufacturing plant that they're ramping up. It was good to see that Panasonic is going to come to the table and help out on that front. And I think that having Tesla as under Tesla's umbrella helps Panasonic come to the table there. As far as the political climate, I mean, the political climate is, I think, across many sectors, is faced with a lot of uncertainty. I think Trump is and his staff has been very clear that they're not going to be supportive of climate change. Now, the investment tax credits that really drive one of the drivers of solar in the United States was kind of shepherded in by Paul Ryan, and it's a jobs creator. And so I don't think they're going to go after tax credits. It's still a risk, and it's still something that people are talking about. I think that the vision is to get down to a cost that you're competitive without tax credits, and there are companies on the verge of that. In the backdrop, though, we do have a very difficult solar environment right now with a major glut that we probably haven't seen for 4 or 5 years because of oversupply, and particularly because of ramping up too much capacity. In the short term, intermediate term, Solar City benefits from that because they're a buyer of panels, and when we're seeing prices of panels drop dramatically, that will help their costs and help with adoption.
In the short and longer term, David, what are the new products that Tesla/Solar City will actually offer?
Well, you're going to see a solar roof. So these aren't just big panels you install on top of the house. These are actually architectural roofs that look like a real roof, and they actually look pretty good. And it's a total one-piece solar unit that is the entire roof of a house or a building. That'll be key for Solar City. For Tesla, the big thing coming is obviously the Model 3, which is going to come out in about 18 months. And that vehicle has to go off without a hitch because that's going to be the one that sells in high volume and really generates cash to keep this entire enterprise going. After that, Elon's talked about a delivery truck, a pickup truck, all being electric. And I think my guess is we'll see the pickup truck first. But you're going to see a fleet of vehicles, assuming the Model 3 goes well and generates a lot of cash for the company. You'll see a fleet of Tesla electric vehicles coming out over the next several years.
The business of running a stock exchange has changed quite a bit. Fees are up, listings down, and disclosure and requirements are easier than they've been in years. Add to that a changing of the guard at the top of one of the biggest operators in the U.S. Bloomberg's Betty Liu talked to incoming NASDAQ CEO Adena Friedman on changes at the exchange.
And I've been working with Bob now for 10 years, and most notably when I came back as president and now COO, he and I have been really partnered together to make sure that we're optimizing the business. And I do feel that I have my handprints on the vast majority of what we've been driving towards and what we've been focused on within NASDAQ for the last 2 years. So my job is to continue the journey that we've been on to make sure that we continue to be a critical market infrastructure provider and technology provider to the capital markets.
Well, I know, Bob's been very focused on technology, for instance, right, and really expanding those capabilities of the NASDAQ. Is that going to be a major focus going forward for you?
Yeah, I mean, technology is deeply embedded in our DNA. It's how we got started as an exchange, to be the first electronic exchange. And so I think that will continue to be our focus on how we can bring emerging technologies and really drive them to allow our clients to interact with the capital markets as efficiently and as effectively as possible. Right. And that's coupled, of course, with great client service, regulatory operations, and all the other things that come with being a world-class exchange.
Is there anything different that you might do, as much as you can reveal? Is there anything different that we might expect to see out of the NASDAQ?
Well, I think that generally speaking, we've been transforming NASDAQ into a global market technology provider or a global financial technology provider. And I will expect that I'll continue to take that journey with the clients and with our employees as we continue also, of course, to be a great exchange operator.
Okay, so let's talk a little bit about regulations, right? Because now there's a lot of uncertainty just around policies in general. We were just hearing from President Obama talking about, what may or may not be expected and what he's responsible to, for and not anymore. And there's a lot of talk, as we heard from President-elect Trump, about rolling back some regulations, that have been imposed on the financial world. How is that going to affect the NASDAQ? I mean, how are you preparing for that?
Well, to the extent that we do, in fact, now have a Republican administration, and to the extent that they continue to show a pro-business orientation, that does tend to come with it some level of what I would call balance in regulation. Mm-hmm. And one of the significant areas of regulation that has impacted our industry over the last 7 years has really been Dodd-Frank. And while there are a lot of good safeguards that have been put in place within the industry coming from Dodd-Frank, there's also been, of course, those unintended consequences, most notably that the banks really are no longer really in a position to be able to offer much needed liquidity into some of the markets that we operate. So we'd love to see the opportunity for Dodd-Frank to be modified to allow banks to take responsible risk-taking into the markets as they have to provide that really, really important liquidity.
Modified or retracted? What would you prefer?
I think that we have to recognize the fact that an enormous amount of work went into the creation of Dodd-Frank, and there were a lot of reasons for it. So we have to make sure that we don't have revisionist history. We really recognize the history we come from, but we also know that whenever you put in new regulation, there's always those unintended consequences that come with it. Mm-hmm. So how can we make sure that we are probably more likely modifying the regulation to make sure that it really is, in fact, having the impact that you want it to have? So
do you think, would you say then that a President-elect Trump is good for the exchange then, is good for the financial markets?
I would say that from what we've seen so far, which is only a week in, I would say a Republican administration that has a pro-business orientation would generally be good for the financial industry.
And he's also pledged to cut back on taxes, right? Corporate taxes.
Right.
So how big of an effect is that going to have on the exchange, for instance?
Well, I think that generally speaking, if you have some of the tax policies that they're considering in terms of potential changes in corporate tax rates, the repatriation tax, holiday and other things like that, that really make it so that companies can really optimize the cash that they're generating and reinvest it in the business appropriately and reinvest it in growth. That's just good generally for the economy.
That was our own Betty Lou with Adina Friedman, who takes the helm at the NASDAQ in January. Coming up, could Uber get the last laugh in China? Tighter regulations on ride-hailing could make Didi's business a lot tougher. We'll head to Hong Kong for the details next. And a reminder, all episodes of Bloomberg Technology now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 6 p.m. in New York, 3 p.m. in San Francisco. This is Bloomberg. Samsung is making moves in the automotive technology business. The company has agreed to buy Harman International Industries for $8 billion in cash. Harman makes high-end car audio and is a leader in connected car technology. Harman's CEO says Samsung is a good fit.
Both Samsung and Harman believe this transaction is an ideal strategic fit that will maximize our complementary strengths. Samsung's global scale, R&D capabilities, and distribution channels will provide Harman the resources to broaden our technology portfolio, expand our reach, and accelerate the introduction of industry-first solutions.
Sticking with the car business, it's only been a few months since ride-sharing giant Didi Chuxing bought out Uber's operations in China. Now, Chinese cities are planning to enforce tighter ride-sharing rules, only allowing local city residents to drive for car-hailing apps. If this policy goes into effect, Uber's deal with Didi might give Travis Kalanick the last laugh. Our editor-at-large, Corey Johnson, spoke with Bloomberg's Lulu Chen live from our Hong Kong bureau and Techonomy CEO David Kirkpatrick. Take a listen.
There's a discordance between the central government and the local administrations. If you look at the central government, they have legalized these car-hailing apps. But at the local level, because the city governments are in charge of issuing a lot of the permits for the taxi actual operations, and so this is probably a pushback from the cab drivers and the companies behind them, where they actually take a cut from the operating revenues. And so for Didi coming in and bringing millions more drivers, it is a blow to their business, and that's probably where we're seeing some of this pushback from.
There was a thought that one of the things Uber was doing by stemming the losses in China was taking a step closer to an IPO. And I wonder if you get the sense, not just with Uber, but some of these unicorn companies are starting to think about cashing out their investors, growing up a little bit, and becoming reporting and publicly traded companies. Uber especially.
I think in general that may be happening, but I don't sense it as much at Uber as at some of the other companies. I think Uber is feeling kind of comfortable being able to raise capital at these astronomical private valuations. And frankly, if you look at Facebook's situation that we were talking about earlier on the show, if they had never gone public, they'd be able to do a lot of things to respond to situations that are putting them in a difficult position now that they cannot do when they have to keep churning the advertising crank to please Wall Street. So I could see Travis Kalanick being sympathetic to not going public.
China web giant Tencent reported earnings this week. Profit missed, but revenue beat, and that's thanks to three parts of the business: smartphone games, performance-based ads, plus payment and cloud services. Peter Elstrom covers the company for Bloomberg News and joined us from our Tokyo bureau.
It's a pretty interesting quarter. The company boosted revenues more than 50%, so by almost any standard, that would be considered pretty strong growth. But at the same time, it's investing very heavily in some of these new ventures, and that's the reason that you saw net income rise a few notches more slowly than that. The company is the dominant player in messaging services. Through WeChat and then QQ. It's now investing more aggressively into cloud services, into new kinds of games and media content, into online payment systems too. So it has a bunch of new initiatives that it's trying to invest in and expand its revenue from here, and also get out ahead of a slowing Chinese economy.
Messaging services, as you said, WeChat, QQ have been essential to Tencent's growth. What are some of the trends they're seeing there? Any signs of slowing growth?
Well, just for context, WeChat has about 840 million users, so that's about twice as many as Twitter, more than twice as many as Twitter. It's the most popular messaging service within China. Tencent also has the QQ messaging services. Now, the growth in those services is slowing a bit because they've now been adopted by almost the whole population. Tencent is now focused on trying to monetize those more in a couple of different ways. One, they're selling more advertising through those mediums as they offer new services. And they're also marketing games and other kinds of digital goods through them. So they're very, very popular channels for all sorts of promotions, and Tencent is trying to take advantage of those.
Still ahead, Twitter suspends the accounts of prominent white supremacists as it attempts to curb abuse and harassment. What the latest stuff means for the site. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, in the U.S. on Sirius XM. This is Bloomberg. Welcome back to the Best of Bloomberg Tech. I'm Emily Chang. Fallout from the election of Donald Trump continues to ripple through the tech world, especially when it comes to social media companies. This week, Twitter announced it suspended the accounts of prominent white supremacists. Among them, Richard Spencer, who's often credited for spearheading the so-called alt-right movement that supported President-elect Trump. Twitter also added tools this week to help users better filter out abuse. In a statement, the company said, because Twitter happens in public and in real time, we've had some challenges keeping up with and curbing abusive conduct. We took a step back to reset, take a new approach, find and focus on the most critical needs, and rapidly improve. Meantime, Facebook continues to come under fire for allowing fake news to spread in the run-up to the election. CEO Mark Zuckerberg has dismissed those claims. We caught up with venture capitalist Jennifer Fonstad, co-founder of Aspect Ventures, and Sarah Fryer, who covers social media for Bloomberg Tech.
Twitter has, in the run-up to the election, understood that there's been a dramatic increase in hateful conduct on their site. The Anti-Defamation League has run studies. There has been an increase in white supremacist, anti-Semitic, those kind of commentaries.
As a result of Donald Trump campaigning,
propelled up by the excitement over the election, not necessarily endorsed by Trump, but definitely they have found a way to rally around the election. And so the company was already working on tools to curb harassment in light of that. And I think that the news that they announced earlier this week about some of the more stringent rules that are going to be in place, some of the better reporting tools that people will have, and now they're showing that they can actually take action. And I think that this is all, as you said, something that they've come under fire for in the past. And in the light of the election, they really need to take a serious look at it. For Facebook, it's fake news. There's fake news on Twitter too, but overall on Twitter, people are much more concerned about the amount of harassment and abuse.
Now, both Facebook and Twitter have been criticized for amplifying the voices that people wanted to hear. Let's take a listen to what Mark Zuckerberg had to say about fake news and whether or not it influenced the election. Take a listen.
Personally, I think the idea that fake news on Facebook, of which it's a very small amount of the content, influence the election in any way, I think is a pretty crazy idea.
Jennifer, what do you think? How much responsibility does Twitter bear here?
Well, I think we're seeing that the election in particular has highlighted and amplified how impactful social media is having, whether it's Twitter or Facebook. And so I think all of these private organizations, and we have to emphasize that these are private organizations. They aren't subject to First Amendment coverage. They're not subject to common carrier rules. But how they think about their impact requires them to reflect on what that looks like, even if it's a small percentage of that today, how that will change over time, and what kind of tools that they can use to on a non-arbitrary basis, manage fake news or harassment or aggression through their sites is something that they need to be taking a look at, and I suspect they are.
It's interesting. Of course, Twitter and Facebook are of completely different sizes. Facebook is enormous. David Kirkpatrick, who did that interview with Mark Zuckerberg and wrote the book on Facebook, suggested earlier this week that Jack Dorsey is taking a much more political stance, and where we're seeing Mark Zuckerberg be much more apolitical here.
Absolutely. Zuckerberg, it's very important to him personally to appear unbiased. We saw how Facebook reacted to the dispute earlier this year around trending topics when Gizmodo reported that there may be some liberal biases in the stories that they selected to be trending. Facebook almost overreacted to that. They fired the human editors. They invited conservatives to headquarters to speak with Zuckerberg and learn more about how newsfeed works. This is a very tricky place for Zuckerberg to be in. He does not want to be the arbiter of truth. He doesn't even want to block, biased opinion-mongering news, opinion masquerading as news. Those are going to be the most difficult articles for Facebook to try and restrict. Fake news could be easy. Those kind of things that are trying to persuade people are going to be a lot harder.
Jennifer, do you think Facebook needs to take greater responsibility to add more human editors, human curators of news, more like Yahoo News did back in the day?
Well, I think that Facebook has never characterized themselves as a news site. It's never characterized itself as a promulgator of news. And so I think that putting that responsibility on them from a human editing perspective then actually raises their liability.
But the reality is, users are seeing so much of their news through Facebook.
I think that's fair, and the type of information that's shared. I think actually there may be some automated tool solutions, and users, don't forget the power of users themselves to be able to self-manage and self-regulate, and there's quite a lot of that already today. And Zuckerberg could actually put more tools in place to enable the individuals to be able to manage that as well.
But if people are only clicking on stories they agree with, maybe they won't understand what's fake, or maybe they have been, lacking their own tools to discover what news is or isn't to be believed.
I think that's a challenge, and I think that's a challenge, though, even before Facebook came along, because people often choose to hear information that they want to hear, and they choose Fox News over CNN in the same fashion. So how much of that responsibility falls back to Zuckerberg and Facebook versus the individual and the consumer and the education system that we try to foster acceptance of different voices?
By the way, Sheryl Sandberg, the COO of Facebook, did publicly endorse Hillary Clinton in this particular election. Let's talk a little bit about Snapchat, though, because we've reported now that they have filed to go public. They filed to go public before the election. Is Snapchat facing any of these allegations, or are they in a different place because the content is so ephemeral?
The funny thing about Snapchat is it's not feed-based, and in fact, it's not even one of those situations where you're really sorting through who to follow. They show you what to look at. They have their whole Discover channel that has media partners creating content. They have live stories that have covered rallies by Clinton and Trump, and both candidates have advertised on the platform. So Snapchat's really not been affected by this as much. And you're right, it is more ephemeral content that people are sending to each other. And so and internally, I don't think that Snapchat executives, even though they filed to go public before the election, I don't think they're worried about a Trump presidency. I think everything seems to be pretty much on track over there.
Jennifer, you were just awarded VC of the Year by Deloitte, and I'm curious how you're looking at investing in social media right now. You started a new fund, Aspect Ventures, a few years ago, and given now the power of Facebook and Twitter and Snapchat, do you see social media as a room? Is there really room for growth there?
I think there continues to be amazing innovation, and I think what we're seeing where a lot of the innovation is driving toward is to the conversational user interface. So when you think about the messaging platforms, most of the innovation that we're seeing and investing in is really moving towards where the consumers are spending their time, which is on Slack, on Facebook Messenger, on iMessenger. And so where we see the opportunity for social media, more applications, will be driven off of building on top of that platform.
Jennifer Fonstand there, co-founder of Aspect Ventures, and Bloomberg Sarah Friar. Billionaire and Twitter investor Prince Al-Walid bin Talal spoke to Bloomberg Television from Riyadh this week and weighed in on the state of his various investments, namely Twitter. Despite its falling stock price and the questions around a possible sale, Prince Al-Walid remains optimistic for the future of the site under the CEO.
Jack Dorsey, who was my friend Dorsey, just took over a year ago. And he just established many initiatives that related to sports, NFL and otherwise. I think these have to begin some time. I'm very optimistic because you've seen the latest results of Twitter. Clearly put the floor on this $19, $20 range, which is our break-even points. So anything above that will be a sweetener for us. We're a long-termer. We still believe that the best days of Twitter are yet to come.
Still ahead, Palantir co-founder Joe Lonsdale joins us on his longtime colleague Peter Thiel and how a Trump presidency may impact tech. Plus, Jim Chanos, noted short seller and founder of Kinnikos Associates, chimes in on President-elect Trump's impact on tech stocks. This is Bloomberg. Let's turn now to the MISC Global Forum in Riyadh, where global CEOs and tech pioneers are talking about innovation and how it might help diversify Saudi Arabia's economy away from a reliance on oil. Bloomberg's Eric Schatzker sat down with Joe Lonsdale, co-founder of Palantir Technologies. The question: what will Palantir investor Peter Thiel bring to President-elect Donald Trump's transition team?
Peter's been one of my most important mentors and is one of the smartest people I know. I think that what's unique about him is he's really able to look at things from very contrarian perspectives. Like the way he maps out the world is not the way people probably in the media or in other places are talking about like what matters. And so I think having Peter there is going to give him a really unique strategic perspective, and I'm really excited to see him as part of it.
What do you think his priorities will be?
I'm not exactly sure what his priorities will be. I think that he has a lot of common sense around the things that matter for the tech sector, which for me is a lot of the regulatory reform, a lot of the high-skilled immigration type things. And I think Peter really believes in making America a place where you're continuing to advance and build new things and really think about the future. He talks a lot about how the 1960s were always looking to the future and sci-fi was really in, and how we don't have that anymore. So I think Peter's going to try to figure out how to put that back into place, is my impression.
Broadly speaking, do you think his role ensures a positive, or at the very least an accommodative environment for technology and maybe even Silicon Valley more specifically?
I don't think you can say it ensures anything. It gives me a lot more comfort that we're not going to screw up the trade stuff that I think a lot of us are really worried about personally. And I think it gives me a lot of comfort that it's going to be good for up and coming businesses. In terms of the big established tech businesses and the ones that people might label monopolies, I don't know if he can protect them or not. So we're going to see what happens with that.
Given the kind of work that Palantir has done for the U.S. government, what kinds of restrictions does it face in a place like Saudi Arabia or the Gulf more broadly?
I think the restrictions, frankly, in my opinion, on Palantir, and I can only speak for it now as a co-founder who's no longer running it, is really the moral restrictions internally to the company. Like, the U.S. government has encouraged Palantir to work with allied countries and wants it to work with people, and going after terrorists is one of the things they do, with appropriate use of data and civil liberties. And I think that there's a lot of governments here that they want to help work with the U.S. and they want to help do that job, but obviously they're not going to want to support regimes that are doing things that are against our own civil libertarian values.
So there's self-imposed gates, in other words.
There are other impositions, such as you can't work with certain parts of China or Iran or et cetera. But I think for a lot of the U.S. allies, I think a lot of the rules become more self-imposed in terms of what us in Silicon Valley want to help with and not help with.
One of the curious things about Palantir is that it remains private. And if I'm not mistaken, your co-founder, Alex Karp, who remains CEO of the company, once said that running a company like Palantir would be awfully difficult if it were public. Do you think that's still the case?
I think that a lot of these founders, who are, a lot of them very bright people I learn a lot from, overestimate how hard it is to be public. I think that there's a lot of people who are very scared of becoming public, and a lot of my friends who have made that transition, it's not quite as bad as people think.
Do you think the time will come when Palantir can go public?
Oh, I definitely believe so.
How long do you think it'll take?
I'm not sure about that. That's a tougher question. I as an early shareholder, I would like to see it earlier, and some other people, I understand why they might want to delay a little bit too. So I think that's something that they're going to figure out.
Joe, of all the trends in technology today, whether it's big data, whether it's machine learning, whether it's AI or autonomous cars, or anything else for that matter, because the list goes on, what excites you the most?
What excites me the most right now is how all the biggest industries in the world, the fundamental processes that run those industries are being changed over the next 10 or 20 years. And so when you talk about AI or machine learning or other things, those are all tools we use, just like the cloud's a tool we use. But the real fundamental truth is that data right now is not being used to run these industries in the way that it could be. And so that's the big shift that's happening, is there are platforms being put in place to harness data that for the first time is being input into how certain parts of healthcare, finance, government are being run, and are going to make those industries work in a lot better ways. And so I'm really excited about fixing big industries and using technology to run them.
One of the questions technologists like you get all the time is what happens to the jobs? How do you answer it?
That's also another great question. I think that jobs are not necessarily as much of a zero-sum thing as people think. If it's correct that we're going to get rid of all the manufacturing jobs and all these things are going away, what that would mean is we now have a world where pretty much everything you could buy is extraordinarily cheap because there's no extra marginal cost of human input. So what that means is the cost of everything that we buy goes down by 98, 99%. And in the meantime, I still think there's services jobs, there's entertainment, there's other things people could do to create wealth. So I think that's actually more of a golden age if we can all afford things really cheaply. It's not nearly as scary as people say.
And how do you capitalize on it as an investor, as an entrepreneur?
Well, I think the shift that's going on in the next 30 years is that there's platforms being put in place that are going to run the big industries. You have to figure out what those platforms are, what position they're going to be in, and you want to be investing in the best platform companies.
Still to come, a powerful protection over consumer internet access could be on the chopping block under the Trump administration. We're debating the future of net neutrality next. This is Bloomberg. A story we are watching, Microsoft has offered concessions to European Union regulators trying to smooth the way for the planned acquisition of LinkedIn. Europe's competition regulators started casting an eye over the mega merger in October, investigating the business activities of the two firms to determine whether the proposed merger could be bad for competition. Microsoft announced the $26.2 billion deal back in June. Tech stocks were hit hard by President-elect Trump's surprise win, though they've crept back slightly in recent days. Many have been questioning what a Trump presidency will mean for technology, specifically Facebook, Amazon, Netflix, and Google. Kinko's founder and famed short seller Jim Chanos joined Joe Wiesenthal and Scarlett Fu on Bloomberg this week, and they asked him what President-elect Trump means for big cap U.S. tech. Take a listen.
I mean, I think there's some basic narrative about technology and Silicon Valley being out of favor, just as much middle America is in favor. But again, as we've said, who knows? I mean, it's too early to tell.
But prior to this election, I mean, the recent moves aside, did what we see in these big tech stocks look bubbly, like investors were sort of casting aside rationalism about valuations?
Well, again, it depends. I mean, we're stock guys, so you know, in the FANG stocks, there's certain things we think are overvalued, and the business models are more questionable, and others I think are actually almost borderline cheap. So,
which ones are cheap?
Well, I'm not gonna disclose where we are in the FANG specifically, but the point being is that I think everything's moving together right now thematically, and I think over time that's going to dissipate, and the companies are going to be judged on their own merits. But take a look at something like just as simple as net neutrality, which the Obama administration embraced, and basically hamstrung the telecom companies to the positive of the internet companies. He's in the past talked about that not being fair to the telecom companies. So companies that have benefited from net neutrality, you know, have gotten hit pretty hard. But will he enact anything? We don't know.
What do you think about what a President Donald Trump would mean for big deals that are still pending, such as AT&T and its effort to buy Time Warner? Well,
again, I think that if we're right about possibly our populist theory we've been discussing, I think there'll be fewer business combinations. That they tend not to happen in those time periods. And he's sort of indicated some skepticism, I think, on a couple of big deals.
That was Jim Chanos, founder of Kinko's Associates. Net neutrality is considered by many to be the Obama administration's signature policy on tech. Remember, this is the idea internet service providers like AT&T and Verizon cannot create fast and slow lanes for web traffic, putting companies like Netflix at their mercy. The FCC passed rules in 2015 prohibiting this, but the election of Trump has many industry watchers concerned that net neutrality could end up on the chopping block come 2017. While he didn't have a clear policy platform on the issue, Trump once tweeted back in 2014, Obama's attack on the internet is another top-down power grab. Net neutrality is the fairness doctrine. Will target conservative media. We were joined by industry analyst and author Larry Downs and Tech Freedom President Baron Soka for a roundtable discussion.
So I don't think that's what's going to happen. I think in that tweet that you mentioned was really in response to President Obama's announcement that he wanted the FCC to turn ISPs into public utilities, which the FCC did. That's the part of the ruling in 2015 that I think will go. But I think the net neutrality rules themselves aren't all that controversial. They either Congress or a new FCC may move them back to the Federal Trade Commission, but I don't really think that they're going anywhere.
So that means you think it'll remain basically business as usual, no fast and slow lanes?
Yes, business as usual for net neutrality, not business as usual, though, for this reclassification of ISPs as utilities. That, I think, will
So
go.
what would it mean for Netflix?
It won't change anything as far as Netflix is concerned, or for consumers, for that matter. In fact, none of these rules were really being violated in the years before the FCC had rules in the first place, because the Federal Trade Commission was already on the job enforcing them.
Now, Baron, our Bloomberg intelligence analysts have analyzed outlined three possible ways that the policy could change. One, through the courts. We're expecting Trump to indeed appoint another Supreme Court justice, through Congress limiting the FCC's ability, or via a new Trump-appointed chair of the FCC. The FCC would then change the rules themselves. What do you think is the most likely path forward?
Well, I think you can count on the new FCC chairman, whoever that is, as Larry says, to start undoing the legal claims of authority that underlay the two open internet orders we've seen. And once that happens, I think that will, by default, kick the issue back to the Federal Trade Commission, which, as Larry said, could have addressed this issue starting about 10 years ago. And then that really forces Democrats to decide, do they really want to take the legislative deal that Republicans offered them last year? And if they do, they may succeed in getting some version of the issue back to the Federal Communications Commission, or they may get the Federal Trade Commission to have rulemaking power. But I think Larry's basically right. You're not going to see this issue change fundamentally. The 2010 rules were never really controversial at their core, and industry, if they had to, would sign up today to a regulatory pledge that would be enforced by the Federal Trade Commission.
Now, Larry, there has been debate over the authority of the FCC in general, whether it's net neutrality or some other issues. Do you think that authority will again be questioned in a Trump administration?
Yes, so I think so. I mean, the question has always been, in 1996, did Congress give the FCC any authority over broadband? And that's what we've really been fighting about for the last 10 years. It's not really clear. Congress may step in now and make this much clearer, I think, than they did. That was part of the bill that Barron mentioned. The FCC may voluntarily sort of reinterpret it itself and say, no, we're going back to the version we had all along up until Chairman Wheeler. But that will definitely be a keystone of what the new FCC will do, is to kind of re-examine its own authority and decide, what did Congress really mean, what really is our limit.
What about when it comes to M&A, Barron? I mean, Trump has indicated he's not a fan of the AT&T Time Warner measure, but, you know, at best, what he believes, no one really knows. It's been a little confusing. There's been other analysis that Trump could be good for M&A, that a Sprint T-Mobile could merge in this era if they wanted to. How do you think the FCC, a Trump FCC, will weigh in on M&A issues?
There's really no way to tell. We have to wait to see who becomes chairman and who takes over antitrust at the Department of Justice. But the people who actually follow these things are, in general, skeptical of the need for government intervention and are generally more willing to let deals go through. And then if there are issues, if there are real demonstrated harms to consumers, to come up with conditions that would really respond to those instead of either blocking deals or using conditions just to regulate without going through the normal process as the Obama administration has done. So I think probably we'll see deals more likely to go through, but it depends. And if you saw a wild card chairman come in that might follow through on what Trump has tweeted about, maybe things would be different, but there's no way to tell at this point.
Silicon Valley, Larry, is in an interesting position, having been so outspoken against Donald Trump. How do you see the relationship between Trump and the tech industry playing out? Do you think Trump risks alienating them even further, and to their detriment, perhaps?
Yeah. I think what we can hope for is that Republicans, are free trade. Silicon Valley likes things to be left unregulated, and hopefully those things will align and the sort of character differences will work themselves out.
That does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week as President-elect Donald Trump's election continues to ripple through the tech world. Tune in, 6 p.m. Eastern, 3 p.m. Pacific. We'll see you then. This is Bloomberg.